Check out shares of Shake Shack jumping more than 13% today after the company upped its guidance for Q4 revenue. I did just speak with CEO Randy Garutti on Closing Bell, who was at the much-watched ICR conference. Here's what he had to say.
We've had this strong, consistent, slow recovery through COVID, and it really peaked in the Q4. And, you know, anybody who's been around New York and doing things in fourth quarter, things just were starting to move again.
For more on the other headlines coming out of the Consumer ICR conference, let's get to Courtney Reagan. Hi, Courtney.
Hi, Sarah. Yeah, so you know this annual conference is the one where specialty retail and consumer companies gather with the investor community. And because of the timing of this, a lot of them pre-announce results from the holiday quarter to be able to discuss them. So shares of Abercrombie, a big winner today, up almost 8%. The retailer said supply chain issues meant it didn't have enough inventory to match strong shopper demand over the holidays, leading to lost sales opportunities. But now that the merchandise is available, it's seeing sales accelerate. So while preliminary expectations for the quarter are short of consensus, investors like what's happening now for that mall retailer, recapturing potentially some of those lost sales. Like Abercrombie, American Eagle Outfitters is sharing store resources where possible when there are staffing issues due to the Omicron COVID outbreak. So while AEO forecasts its holiday quarter sales to be up mid to high teens instead of the 21.5% analysts project, investors were comforted by the CFO's comment that the Omicron issues will at least be short-term in their opinion, and as a result, they upped the 2023 full-year revenue expectations. Discounter Big Lots, however, a little less rosy about what's going on. It's seen traffic and sales slow since early January due to Omicron and weather. Shares of Big Lots down about 1.5%. And Sarah, of course, that's a retailer that does rely more on in-store traffic than its e-commerce sales as sort of one of those off-price discounters.
Courtney, thank you for rounding it all up for us. Let's trade it. Karen, on retail, I turn to you, and maybe that's the distinction on who's getting hurt by Omicron, how much you rely on stores and traffic, because in Lulu's warning yesterday, Lululemon, that's what they were blaming, capacity constraints and staffing around some of the stores, not necessarily consumer weakness.
Right, and I thought that was really interesting because Lulu is good at online, so you thought, all right, that could be somewhat of a ballast for them. So for them to guide to the low end, they must really have some trouble in the retail stores. So that is going to be a problem for a lot of retailers that rely so heavily on that. My biggest retail position is in Target, that I hope, given what they were able to do during the pandemic to become really a e-commerce business as well. They had already started that before the pandemic hit, but that accelerated it. So to me, Target is my biggest retail position. I like it because it is a below market multiple, but I think it's well situated either in an Omicron or a reopen. Walmart as well, but Walmart's more expensive. So that's kind of where I have most of my e-commerce bets, some in Capri. I wonder, though, if China lockdown is a little bit of a headwind for luxury there. So that's something to worry about. But I still like Target, probably with Pete on this one.
Pete, I was just going to say, Pete, are you still a Target lover, too?
I am. As a matter of fact, Sarah, on that last dip that we had where it got right around that 220 level, I bought more. You know what? I like the stock. It's cheap, as Karen just points out. They have a great e-commerce business, and I think whether it's during the pandemic or after the pandemic, I think they are just well fit for absolute success going forward. And they're not stopping. They're continuing to move along as a company. They're not letting this hamper them for the future either. And they continue with the smaller stores and all the rest of it. So there's a lot of good things going on there. I'd agree also with the Walmart comment, a little bit more expensive. But you know what's really expensive and got hit the other day is Costco. We all love Costco. We all think it's a great company. They do everything right, it seems. But they are really stretched when you look at the PE of a Costco versus something like obviously Target or Walmart, and we put those comparables together. But I think the e-commerce world is definitely the important place to be. But when you talked about Lululemon, it really did shock me the other day when I heard that news. But when we talk about the labor shortage, that makes a lot more sense. Obviously, e-commerce is big, but they still want people in the store. When people go into stores, they tend to buy more. And that's something that Lulu is missing out on because of the numbers that they're reducing to get into stores safely and the fact that they're having such a difficult time with labor.
Everybody's having a difficult time with labor. Even Shake Shack, which today had such good news on revenues, complaining about labor. We talked to the CEO of Krispy Kreme and all these companies. Mike Coe, how do you pick your spot in retail right now?
Yeah, you know, it's interesting because some of the weakness that obviously they're talking about as far as labor is concerned, part of that actually is, you know, ironically an expression of consumer confidence. You know, we've seen that a number of people have been, you know, quitting their jobs, resigning their jobs, presumably looking for better ones. That's the kind of activity that a confident, you know, employee, that a confident consumer might make. And with respect to Lululemon, it's interesting because that's on my Holly Index. That is the list of companies that my wife spends a lot of money at. And what's interesting is that she doesn't buy anything from Lululemon online. She likes to go in, she likes to see what the stuff is, and then she walks out with something that weighs about a pound but cost about $1,000. So, you know, I think that's one of the things about Lululemon is that some people do actually want to be in the store, and I can understand the labor situation. You know, it's also interesting in consumer discretionary, names like CarMax. That's interesting to me because I think we still have some supply issues on the auto side, and that obviously has kept used car prices relatively elevated, and that's great for the margins of an output like CarMax, and I expect that to continue for another couple of years.
Did not see that turn coming from Lulu to CarMax.